1815. The Battle of Waterloo had just ended. Napoleon was defeated. Europe was in chaos. And one family, the Rothschilds, used information advantage and financial networks spanning 5 countries to execute what may be the most profitable trade in history. Nathan Rothschild in London knew Wellington had won before the British government did. He used that knowledge to buy British government bonds at collapsed prices. When the official news arrived and bond prices soared, the Rothschild fortune multiplied. This single event established the family as the most powerful banking dynasty in Europe. But Waterloo wasn't the beginning. It was the confirmation of a system the Rothschilds had been building for decades. 5 brothers positioned in 5 financial capitals: Frankfurt, London, Paris, Vienna, and Naples, operating as one coordinated network. Private couriers faster than government messengers. Encrypted communications, cross-border lending to kings and governments. The Rothschilds didn't just finance wars and revolutions, they created the template for modern international banking and central bank systems that persist today. This is the story of how one Jewish family from the Frankfurt ghetto built a banking empire that influenced European politics for 2 centuries. How they financed the British war effort against Napoleon, funded the construction of railways across Europe, and became creditors to governments across the continent. How their network of intelligence and communication gave them advantages no competitor could match, and how the systems they created, correspondent banking, government bond markets, central bank relationships, became the foundation of modern finance. Understanding the Rothschild story matters because it demonstrates how financial power translates to political influence. The Rothschilds didn't control governments directly, but governments that owed them money had constraints on their actions. The family's ability to move capital across borders, to coordinate lending and withdrawals, gave them leverage over sovereign policy. This dynamic, where private financial interests constrain government sovereignty, is the same dynamic that operates today through bond markets, central banks, and international financial institutions. The Rothschild banking empire began with Meyer Amschel Rothschild in Frankfurt in the late 1700s. Meyer was a court agent and trader dealing in rare coins and antiques for wealthy clients, including the Prince of Hesse-Kassel. This relationship proved critical. The prince was one of Europe's wealthiest individuals, and when he needed to hide his fortune from Napoleon's advancing armies, Meyer helped conceal and manage the assets. This established trust and gave Meyer access to significant capital. Meyer recognized that the future of banking was international. Wars, trade, and politics crossed borders, but most bankers operated locally. Meyer's strategic insight was positioning family members in different financial centers to create a coordinated network. He had 5 sons: Amschel in Frankfurt, Salomon in Vienna, Nathan in London, Karl in Naples, and James in Paris. Each established a banking house in their respective city. Each operated independently, but coordinated through family loyalty and shared interest. Each brother brought specific advantages to the network. Amschel remained in Frankfurt, managing the original family business and maintaining relationships with German aristocracy. He was the cautious anchor, ensuring the family's German base remained solid. Salomon in Vienna cultivated relationships with the Habsburg court and financed Austrian government operations. Austria was a major power, and Salomon's position gave the family direct access to Central European politics and finance. Nathan in London became the network's most powerful node. London was the world's financial capital, and Nathan positioned himself at its center. He was aggressive, brilliant at reading markets, and ruthless in exploiting advantages. Nathan's personality and positioning made him the de facto leader of the 5 brothers despite not being the eldest. His connections to the British government and his domination of the London gold market gave the family enormous leverage. Karl in Naples operated in the Kingdom of the Two Sicilies, providing the network a presence in southern Europe and Mediterranean trade. Naples was less central than London or Paris, but Karl's position allowed the family to finance Italian states and monitor political developments in the region. James in Paris became the family's representative to French power. Post-Napoleon France remained a major European force, and James's relationships with French governments, both monarchist and later republican, made him indispensable to French state finance. The brothers communicated constantly. Letters, couriers, and coded messages flowed between the 5 houses daily. They shared information about markets, politics, and opportunities. They coordinated positions. If Vienna was buying Austrian bonds, London might hedge by selling or taking opposite positions in British securities. The network operated as one entity across 5 countries, giving the Rothschilds capabilities no competitor could match. The network's power came from coordination and information. The Rothschilds developed a private courier system faster than official government messengers. Carrier pigeons, fast ships, and mounted couriers brought market information, political news, and financial data to each branch before competitors or even governments knew. This information advantage allowed the Rothschilds to anticipate market movements, position capital ahead of events, and profit from volatility others couldn't predict. The courier system was sophisticated and expensive. The family maintained dedicated couriers who traveled exclusively for Rothschild business. These weren't ordinary messengers. They were trusted employees who understood the value of speed and discretion. Routes were optimized. Ships were chartered specifically for Rothschild communications. During critical periods, multiple redundant couriers might be sent with the same information to ensure delivery. The family also developed coded communication systems. Messages between branches used codes and ciphers to prevent interception from revealing sensitive information. This meant even if a letter was intercepted, competitors or governments couldn't decipher Rothschild's strategy. The codes were family secrets, changed periodically, and known only to trusted family members and key employees. Specific examples demonstrate the system's value. In 1830, when revolution broke out in France and King Charles X was overthrown, the Rothschilds knew within hours. While other investors panicked based on rumors, the Rothschilds had accurate information about what was actually happening. This allowed them to position accordingly, selling what would decline, buying what would recover, while competitors traded blind. The information network extended beyond finance. The Rothschilds gathered political intelligence, military information, and economic data. They knew which ministers were influential, which policies were being debated, which countries were preparing for war. This intelligence wasn't gathered for its own sake. It was monetized through better investment decisions, strategic lending, and market positioning. Information was capital, and the Rothschilds invested heavily in acquiring it. The Napoleonic Wars provided the proving ground. Britain was fighting Napoleon across Europe and needed enormous financing. Traditional lending sources couldn't provide the scale or speed required. Nathan Rothschild in London became the primary financier of the British war effort, arranging massive gold shipments to Wellington's armies and managing government bond issuances. The British government depended on Rothschild credit to sustain military operations. The Waterloo episode in 1815 demonstrated the network's capabilities. When Wellington defeated Napoleon at Waterloo, Nathan Rothschild's courier brought the news to London before official British messengers arrived. The legend, possibly apocryphal but revealing in its persistence, claims Nathan initially sold British bonds, creating panic and driving prices down, then secretly bought massive quantities at depressed prices before official confirmation arrived. When the government announced victory, bond prices soared and Rothschild profits were immense. Whether the exact details are accurate or embellished, the underlying reality is documented. The Rothschilds had better information than governments and used it for financial advantage. This wasn't illegal or even unusual at the time. It was smart business. But it established a pattern where the family possessed strategic information advantages that translated to wealth and influence. Post-Waterloo, the Rothschilds became indispensable to European governments. Nations emerging from the Napoleonic Wars needed reconstruction capital. The Rothschilds provided it, but on terms that gave the family enormous leverage. Government bonds were issued through Rothschild banking houses. Loan terms, interest rates, and repayment conditions were negotiated with Rothschild input. Governments became dependent on Rothschild willingness to finance deficits. The scale of Rothschild lending was staggering. In 1818, the Rothschilds arranged a loan of £5 million to Prussia, an enormous sum. In 1822, they loaned £3.5 million to Austria and Naples. In 1823, a loan to France. These weren't commercial loans to businesses. These were sovereign loans to major European powers. The interest payments alone generated massive income for the family, and the political leverage was even more valuable. The family developed a reputation for reliability that made their involvement crucial for bond success. A government bond issued without Rothschild backing might struggle to find buyers. A bond issued through Rothschild houses was virtually guaranteed to sell. This gatekeeping function gave the Rothschilds enormous power to decide which governments could access capital markets and on what terms. Governments couldn't simply go elsewhere. There was no elsewhere at that scale. Specific examples illustrate the family's reach. When Belgium declared independence from the Netherlands in 1830, it needed international recognition and financing. The Rothschilds provided both, arranging loans that gave Belgium credibility and coordinating with European powers to secure recognition. The family effectively underwrote Belgian independence, and Belgium's government understood that Rothschild support was essential to the new nation's survival. When the British government needed to abolish slavery in its colonies in 1833, it required £20 million in compensation to slave owners. The Rothschilds arranged the loan. This means the Rothschilds financed the end of British slavery, not from altruism but as a profitable transaction. The loan was repaid by British taxpayers over decades, with interest flowing to Rothschild coffers. Moral outcomes and financial profit weren't separate. The family profited from financing what Britain wanted to do anyway. This created a dynamic where the Rothschilds could influence policy without holding office. A government pursuing policies the Rothschilds opposed might find credit more expensive or unavailable. A government the Rothschilds supported might receive favorable terms. This wasn't corruption in the traditional sense. It was market power translating to political influence. But the effect was that financial interests could constrain sovereign decision-making. The family's political influence extended to central banking. The Rothschilds were instrumental in establishing or reorganizing central banks across Europe. The Bank of England, Bank of France, and Austrian National Bank all had Rothschild involvement in their operations or capitalization. This gave the family direct influence over monetary policy, credit conditions, and currency stability in major European economies. Central banks were supposed to serve public interests, but in practice, they often operated in ways compatible with Rothschild financial interests. The Rothschilds also financed infrastructure that shaped Europe's development. Railways required massive capital that traditional sources couldn't provide. The Rothschilds financed railway construction across France, Austria, and other countries. This wasn't just profitable. It gave the family strategic influence over transportation, logistics, and industrial development. Controlling railway financing meant influence over routes, connections, and economic integration. The family's wealth became legendary. Estimates suggest the Rothschilds in the mid-1800s controlled wealth equivalent to billions or even trillions in today's terms. They owned estates, art collections, and businesses across Europe. But more important than absolute wealth was relative influence. The Rothschilds often held more liquid capital than many governments and could move it across borders instantly through their network. The Rothschild system relied on several key innovations that became standard banking practice. Correspondent banking, where banks in different countries maintain accounts with each other to facilitate international transactions, was pioneered by the Rothschilds. Their 5 houses acted as correspondents, allowing seamless capital movement across Europe. This is now standard practice for all international banks. Government bond markets developed largely through Rothschild activities. Before the Rothschilds, government borrowing was often ad hoc and localized. The Rothschilds created liquid secondary markets where bonds could be traded, providing governments with ongoing access to capital and investors with exit liquidity. This innovation made government debt more attractive to investors and gave governments more sustainable financing options. It also gave the Rothschilds enormous profits from bond trading. The family's communication network became a template for financial intelligence gathering. The Rothschilds understood that information was as valuable as capital. Their courier system, later supplemented by telegraph when it became available, ensured they knew political developments, market movements, and economic data before competitors. This is why modern financial institutions invest billions in communication technology, data networks, and information systems. The principle the Rothschilds established remains central to competitive advantage. The Rothschilds also pioneered risk management across borders. Operating in 5 countries meant exposure to different political risks, currency fluctuations, and economic conditions. The family developed sophisticated methods for hedging exposures, diversifying risk, and balancing positions across their network. Modern multinational banks use similar strategies, but the Rothschilds were implementing these techniques 2 centuries ago. Political connections were cultivated systematically. The Rothschilds maintained relationships with monarchs, ministers, and influential figures across Europe. They provided personal loans, managed private fortunes, and offered financial advice. These relationships weren't just social, they were strategic assets. A finance minister who owed the Rothschilds money or relied on their advice would consider Rothschild interests when making policy decisions. The family's Jewish identity added complexity to their position. In an era of widespread anti-Semitism, the Rothschilds faced social exclusion and legal restrictions in many countries. Yet their financial power gave them access and influence that transcended religious prejudice, at least in economic matters. Governments that might discriminate against Jews generally still borrowed from Rothschild banks. This created a paradox where the family was simultaneously marginalized socially and indispensable economically. Anti-Semitic conspiracy theories about the Rothschilds emerged early and persist today. The family's actual influence was significant but bounded by reality. They couldn't control governments outright. They influenced policy through financial leverage, which is different. They didn't orchestrate wars, though they profited from financing them. They didn't control all global finance, though they were dominant in European government lending for decades. Separating legitimate historical influence from conspiratorial exaggeration is essential. The family's peak influence was probably 1815 to 1870s. During this period, the Rothschilds were often the first call for European governments needing loans. Their bond issuances could make or break national credit. Their information network was unmatched. But over time, competitors emerged, national banks developed, governments built their own financing capabilities. The Rothschild advantage eroded, though the family remained influential into the 20th century. When the London gold pool closed in March 1968, there was no warning. Investors woke up, and the market was locked. No gold available, no conversion. Done. We created the 7-stage collapse survival guide so you never get trapped when the window closes. It shows you exactly when to move your wealth into assets that survive collapse. Before banks freeze, before governments confiscate, before inflation devours your savings, while you can still act. World War I devastated the European Rothschild houses. The family had branches in countries that were enemies, Britain and France versus Austria and Germany. Assets were seized, operations were disrupted. The post-war environment was hostile to old financial dynasties. The rise of central banking and government economic management reduced space for private banking houses to operate at the scale the Rothschilds once did. World War II was even more catastrophic. The Nazi regime specifically targeted Jewish wealth. The Rothschilds in Austria and France lost assets, had properties confiscated, and family members fled or were killed. The Vienna house was destroyed. The Paris house survived but diminished. Only the London branch maintained continuity and significant operations. The family's European dominance ended definitively. Post-World War II, the Rothschild family businesses continued but as one among many financial institutions rather than dominant powers. The London house, N.M. Rothschild and Sons, remained a significant merchant bank involved in gold fixing, corporate finance, and advisory services. The Paris house, Rothschild and C operated in French markets. But the era of Rothschild centrality to European government finance was over. National central banks, the International Monetary Fund, and large American banks had assumed the roles the Rothschilds once played. The family's legacy in modern finance is profound but often unrecognized. Correspondent banking networks that allow international transactions, Rothschild innovation. Liquid government bond markets that enable sovereign borrowing, Rothschild development. Central bank relationships with private banking houses, Rothschild template. Information networks that give financial institutions advantages, Rothschild principle. The specific family may no longer dominate, but the systems they pioneered are foundations of contemporary finance. The Rothschild story also illustrates how private financial power can constrain government sovereignty. When governments depend on private creditors for financing, those creditors gain leverage. This leverage can be used to influence policy, constrain options, and shape outcomes. The dynamic the Rothschilds demonstrated, where bond markets, credit terms, and lender willingness affect government behavior, operates today through different institutions but similar mechanisms. Modern bond markets constrain government policy similarly to how Rothschild lending once did. A government pursuing policies that bond investors disapprove of will see yields spike and borrowing costs increase. This forces policy adjustment even without explicit coordination. The market itself disciplines governments. The Rothschilds were once the market for European government debt. Today, global bond markets perform that function collectively, but the constraining effect is similar. Central banks were supposed to free governments from dependence on private bankers like the Rothschilds. But in practice, central banks often operate with considerable independence from elected governments and maintain close relationships with private financial institutions. The revolving door between central banks and private banks, the consultation processes, the shared assumptions about monetary policy, these create dynamics not unlike the Rothschild government relationships of the 1800s. The specific actors changed, but the structural relationships persist. The information advantages the Rothschilds cultivated are now pursued by all major financial institutions. High-frequency trading firms spend millions on microsecond communication advantages. Investment banks employ thousands gathering market intelligence. Hedge funds develop alternative data sources to gain informational edges. The principle is identical to what the Rothschilds pioneered. Better information than competitors translates to better returns. The technology is different, but the logic is unchanged. The Rothschilds also demonstrated that financial power is transferable across generations if managed carefully. The family maintained cohesion and coordination for multiple generations through intermarriage, shared business interests, and cultural identity. Wealth alone dissipates without institutional structure to preserve and grow it. The Rothschilds built institutions, banking houses, partnerships, trusts that outlasted individual lifespans. Modern wealthy families attempt similar strategies through family offices, trusts, and foundations. The geographic diversification strategy the Rothschilds employed, positioning in multiple financial centers to reduce risk and increase opportunities, is now standard for multinational financial institutions. Banks have branches across countries. Investment firms operate globally. Asset managers diversify geographically. The Rothschilds were implementing this strategy when most businesses were purely local. They understood that concentration in one country meant vulnerability to that country's political and economic conditions. The role of networks in financial success, which the Rothschilds embodied, remains central. Who you know, what information you access, which relationships you maintain, these determine opportunities and outcomes in finance as much as technical skills or capital. The Rothschilds built the most sophisticated financial network of their era. Modern finance is similarly network-dependent, though the networks are now often digital platforms, industry associations, and alumni groups rather than family connections. The Rothschilds' influence on the development of capitalism itself was significant. They helped create markets where capital could flow across borders to highest return opportunities. They demonstrated that private banking could finance governments and infrastructure at scale. They showed that financial innovation could be as important as industrial innovation. The financial capitalism that emerged in the 19th and 20th centuries was partly shaped by Rothschild practices and institutions. The family story also reveals the limits of financial power. Despite enormous wealth and influence, the Rothschilds couldn't prevent the world wars that destroyed their European operations. They couldn't stop the rise of anti-Semitism that targeted them. They couldn't maintain dominance when structural conditions, central banking, government capacity, competing institutions shifted. Wealth provides options and influence, but it doesn't guarantee control over large historical forces. You're living in a financial system that bears Rothschild fingerprints. When governments issue bonds, they're using markets the Rothschilds helped create. When banks maintain correspondent relationships internationally, they're using networks the Rothschilds pioneered. When central banks coordinate with private financial institutions, they're operating in frameworks the Rothschilds helped establish. The specific family may no longer be central, but the systems they built persist. The lesson from the Rothschild story is that financial power can be built systematically through information advantages, network effects, and strategic positioning. It also shows that such power is always contingent, dependent on specific conditions, vulnerable to disruption, and ultimately limited by larger forces. The Rothschilds built an empire that lasted generations, but empires always end, and the systems that replace them often incorporate innovations from what came before. The Rothschild model, coordinated international operations, information advantages, government relationships, and risk management across jurisdictions, is now the standard playbook for global financial institutions. J.P. Morgan, Goldman Sachs, HSBC, and other multinational banks operate using principles the Rothschilds pioneered. The scale is larger, the technology is different, but the strategic logic is identical. Position globally, gather information, cultivate relationships with power, and use coordination to create competitive advantages that atomized competitors cannot match. Even the specific mechanisms persist. When governments issue bonds through private banks as intermediaries, that's the Rothschild system. When financial institutions maintain privileged access to central bank communications and policy deliberations, that's the relationship the Rothschilds cultivated. When market intelligence determines trading profits, that's the information advantage the Rothschilds monetized. The names changed, the institutions evolved, but the dynamics remain recognizable to anyone who understands how the Rothschilds operated 2 centuries ago. This is Decoded Economics. Subscribe to see the collapse before it happens.